Welcome to today's Explainer. Now, when you hear the name Texas Instruments, you might instantly think back to your old high school math class and those bulky graphing calculators. But today, we are going to completely reframe that perspective. We're looking at this legacy semiconductor giant not as some old-school hardware company, but as the ultimate foundational builder of the modern AI revolution. And you'll want to stick around, because the numbers we're about to unpack are absolutely staggering.
Okay, let's dive into this. To really grasp the sheer scale of Texas Instruments' current success, we have to start right at the top line. In just the second quarter of 2026 alone, the company brought in an eye-watering $5.46 billion in revenue. It's a massive number, and it immediately grabs your attention because it tells a story of a business that is accelerating fast and operating at the absolute pinnacle of global manufacturing.
But it's not just about the raw total, right? It's about completely crushing market predictions. Wall Street analysts had penciled in $5.26 billion, but Texas Instruments blew right past that. We're talking about a rapid 23% year-over-year growth and 13% growth just from the previous quarter. When you compare this to the severe industry downturn we saw back in 2022, it's honestly a massive resurgence.
So, here's how we're going to break it all down for you today. First, we'll look at this record-breaking quarter. Second, we'll explore how the broader semiconductor upcycle is beginning. Third, we'll reveal how TI is the silent AI beneficiary. Fourth, we'll cover their backing by the CHIPS Act. And finally, we'll wrap up with their acquisitions and future outlook.
All right, let's get into part one, a record-breaking quarter.
Now, as we know, high revenue doesn't automatically guarantee a healthy bottom line. But for TI, it absolutely does. Their net income hit an incredible $1.98 billion, and that translates to an earnings per share of $2.14, jumping a massive 52% from the exact same quarter last year. To put that into perspective, the Wall Street consensus estimate was sitting at just $1.92. Plus, their operating profits surged 48% to $2.3 billion. That means a whopping 42% of their total revenue is pure operating profit.
And these financial wins, they aren't just a stroke of sheer luck. TI CEO Haviv Ilin hit the nail on the head when he said, "Our prior investments in inventory and manufacturing capacity are paying off. The industry may be at the start of a very broad upcycle." So this is the result of highly calculated long-term planning. They built up capacity so they could support their customers exactly when demand spiked.
Which brings us nicely to part two. The semiconductor upcycle begins.
What we're seeing right now isn't just an isolated success story for TI. It's actually the first synchronized industry upcycle since that painful downturn in 2022. Demand is strengthening everywhere. Just look at the data center sector at the top of the list, a staggering 100% year-over-year revenue growth. It literally doubled, but it's not just data centers. Industrial revenue rose about 30%. The analog business, which makes up the lion's share of TI's revenue, grew 26%. Even automotive grew in the mid-teens, driven in a huge way by the massive demand for electric and hybrid vehicles over in China.
So the crucial point to take away from all of this is that inventory destocking has largely ended. For the last couple of years, companies were just burning through their old stockpiles. But now, across the board, whether it's ST Microelectronics, NXP, or TI themselves, who just cut their inventory by $90 million, those backlogged supply chain corrections are basically over. The factory floors are humming again, meaning these new orders reflect genuine, immediate demand in the market.
Moving on to part three, the silent AI beneficiary.
And this brilliantly illustrates the real aha moment of our explainer. On one side, you have the flashy, hyper-competitive market of AI processors. This is where tech giants like NVIDIA and AMD are battling it out for computing supremacy. But on the other side, you have TI's analog chips. Now, these chips don't process digital data. Instead, they manage real-world physical properties like power and temperature. They are literally the essential life support for these massive data centers. So here's the genius of it. TI wins regardless of which GPU maker dominates, because every single one of them absolutely needs TI's hardware to actually function.
Let's look a little closer at what these chips actually do. Every single new AI data center has to pull massive amounts of AC power from the grid and convert it through multiple stages just to feed those incredibly hungry processors. That requires specialized power management chips, current sensing, isolation, and temperature sensors. TI provides the components that manage the power, process the signals, run the intense cooling systems, and control the motors.
Without these foundational, admittedly unglamorous tools, the whole AI revolution literally overheats and shuts down.
Let's transition to part 4, backed by the CHIPS Act.
You see, Texas Instruments is aggressively fortifying its massive market position, and they're doing it with unprecedented government backing. Back in May of 2026, the U.S. government signed a preliminary agreement to hand TI up to $1.6 billion in direct funding through the CHIPS and Science Act. And get this, that is just the direct funding. On top of that, the company expects to pull in an estimated $6 to $8 billion from the U.S. Department of Treasury's investment tax credit. This is an absolutely monumental influx of capital, totally designed to secure domestic manufacturing.
And they are putting that capital to work with a super aggressive expansion roadmap. Armed with those CHIPS Act funds, plus a $33.6 million state grant from the Texas Semiconductor Innovation Fund, announced in July 2026, TI is building 3 massive new facilities. 2 in Texas, 1 in Utah. Just to give you a sense of scale, their Richardson facility alone is ramping up to manufacture over 100 million analog chips every single day. The ultimate goal here? By 2030, they plan to grow their in-house production to more than 95%, creating a massive, geopolitically dependable supply chain.
Finally, part 5, acquisitions and future outlook. So TI isn't just building from scratch, they're also securing their long-term future through strategic mergers and acquisitions. And a massive piece of that puzzle just cleared a major hurdle. On August 7, 2026, Singapore's Competition and Consumer Commission officially cleared TI's proposed $7.8 billion acquisition of the wireless tech company Silicon Labs. The regulator basically concluded that this $231 per share buyout won't lessen global competition, mainly because TI and Silicon Labs aren't actually each other's closest competitors. So this paves the way for the deal to close in 2027, vastly expanding TI's overall capabilities.
And honestly, they have plenty of cash to pull this off. Over the trailing 12 months, Texas Instruments generated an explosive $6.5 billion in free cash flow. That is a sharp, massive increase from just $1.8 billion a year earlier. This unbelievable capital generation didn't just fund their day-to-day operations, it actually allowed TI to return $5.8 billion directly to their shareholders through dividends and stock repurchases.
Wrapping up their financial outlook, the future looks incredibly bright. For Q3 of 2026, revenue is projected to climb even higher, sitting somewhere between $5.65 and $6.15 billion, with earnings per share reaching up to $2.57. And with their capital expenditures, their investments in physical assets, projected to moderate down to between $2 and $3 billion, and full-year revenue expected to hit $21.7 billion, well, it's really no wonder Wall Street analysts currently hold a consensus rating of moderate buy. This legacy company is truly operating like a modern powerhouse.
Which leaves us with this final thought to ponder today. As the AI revolution accelerates, capturing global attention and literally billions in investment, we really have to ask ourselves, in this modern AI gold rush, are the true winners the ones selling the highly publicized, hyper-competitive processors? Or are the true, lasting winners the ones quietly building and supplying the essential power infrastructure that makes this entire era possible? Thank you so much for joining me for this explainer, and keep learning.